Hi and welcome to my latest video on the American Civil War. So we've done a whole series of videos looking at the build up to the Civil War. We're starting to look at the actual war period itself. This is the second of the context videos. So we're going to look at, in this one, we're going to look at finance and economic context. Now, our last video looked at the political military context. And it would appear from that based on kind of military strength and the political institutions and political leadership, notably comparing Lincoln with Davis, that the Union seemed to hold really most of the cards. I mean, we said initially on paper Davis looks like he had more experience than Lincoln, but in terms of actual ability, then Lincoln's going to come out very much as the stronger leader. So, however, it is far from clear when we look at all the context stuff together that the Union would be victorious, and particularly that it would be victorious in a relatively short period of time. Obviously, the war itself drags on for 4 years, so although we see hopes from Lincoln and others for a short war at the beginning, that won't be the case. So we're going to look at the money side of things in terms of both finance and economics, and try again to build up this picture that if we looked at things at the beginning of the war and some events as they went through the war, what we would think, what judgments we could draw about the Confederacy and the Union. Right, finance is a real issue for the Confederacy. They don't have any gold reserves or very little gold reserves. They printed loads and loads of paper money. This led to inflation. And what we see is that we end up with prices by the end of the war that are 5,000 times higher than they were at the beginning. So there's a real issue here in terms of the control of the money supply. And if you oversupply money, then you devalue it, just like you, with any other commodity or any other good. So as the Confederacy just prints money, it causes itself some real problems. You may have seen this if you studied Weimar Germany at GCSE or some other point in your education, and the same there in Germany. When the Weimar government just printed more money, it causes a lot of trouble, particularly if that money is not supported by something solid like gold. Right, so one way around this was to try and gain money with some kind of proper support behind it. Now, both governments actually issue bonds. The issue with the Confederacy one, where they issue bonds, is that it only works initially. So actually, if we were to look at this just in 61 or say, then it looks like a perfectly sensible policy. There's lots of people who are willing to buy the bonds, particularly abroad, actually. Britain and elsewhere, people saw these as really good values. There was good interest rates offered. And one of the things this shows us in terms of the context is that there was a feeling, even outside the Confederacy, that them being defeated and losing their kind of independence was far from a foregone conclusion. However, as the war developed, these bonds become harder and harder to sell because once the Confederacy starts losing battles and things get more difficult, there are less people willing to take the risk. So that initial part of the finances in 61, not too bad. It's one of the bits with the kind of the finances of the War of the Confederacy that gets worse and worse as things go on. Right, there was, however, some really big mistakes early doors. So we see this with the Union blockade. Now that made it hard for the South, the Confederacy, to sell cotton and raise money from tariffs or anything else. But what they really did is they really shot themselves in the foot on this, because they actually imposed their very own cotton embargo. And this will link in with something I'll look at in a later video. We'll look at foreign relations, because they really wanted to force Britain in on their side. And they thought if they starved Britain of cotton, then this would really damage the British economy. This would force British action. British ships would turn up. Union blockade would go away. But actually, Britain was sat with a surplus of cotton in its warehouses, and also just went and found other markets, notably in India. So this Confederate tactic really does backfire, particularly at this point in the war, but actually in the longer term as well. And Britain's hand isn't forced in this way, and essentially the Confederacy is cutting off its nose to spite its face. And if it had really concentrated on exporting cotton in 61, with more of the line of supplies may become difficult going forward, buy it now, then they probably could have gotten a lot more money that could have financed the war and put them in a much stronger place. Right, as we well know, looking in on America from outside, and particularly from British experience of American history, they aren't very keen on taxation. And taxes, if the Confederate governments were trying at different points on income, on profit, on property, are hugely unpopular. And so this, as a newly formed state, this is a really difficult balancing act. So getting money in is proving to be something of a difficulty for the Confederate government. Adding on that, and we've looked at this, the nature of the Confederacy, when we looked at some of the political stuff, very much based on states' rights. And so most of the states are reluctant to send money to Richmond, the Confederate capital. And overall, what this led to is the Confederacy was struggling with some of the basic things like feeding their troops. And this isn't really an enormous surprise. If we look at what the South produced, you can't eat cotton. I suppose you could chew tobacco, but it's not going to do you nutritionally much good, and you could eat sugar. But again, maybe not the greatest thing to send an army out on. So, but there's going to have to be some adaptation when it comes to the Southern economy. So in terms of the Union, well, they are an established country, as we looked at in the political element. So they have gold reserves. They have a source of revenue coming in from tariffs. The financial structures, however, were fine for peacetime, but they weren't designed for war. And they issued bonds as well. And I always think of this and of the image of Captain America in the first of the Captain America films, with him going out and trying to persuade people to buy bonds. In that instance, it's in those films, it's for World War II. Similar idea for the Civil War. You went out, you sold bonds, people invested in the nation. They would get paid interest. The government would guarantee that they get their money back plus a bit more. And 2/3 of the Union's money are actually raised in this method. Also, very interesting little bit just of kind of economic history is that the first ever income tax is raised in the USA in 61 by the Union government. So they are not set up for war, but they quite quickly are adapting and getting money in. Having said that, again, it depends on when we look at it. Now, if we stop the clock, kind of 61 going into 62, then the real gains and meeting the challenge here hasn't yet been met by the Union government, and their banking system was near collapse at that point. So early on, that economic picture is not completely clear. The Union will go on and solve its problems better than the Confederacy did, but it has problems as well at the beginning of the war. One of the ways that it gets around this is the Legal Tender Act of 62. It issues a load of paper money. Now, I talked about how that causes real problems in the Confederacy. It does cause inflation in the Union, but nowhere near the same levels. We're talking over the period of something like an 80% inflation rather than a 5,000%. So it does restore a bit of liquidity into the economy. And it does restore a bit of kind of confidence that bills will be paid and things like that. So that does work to a reasonable degree. And then we've got the National Banking Acts of 63 and 64, which essentially tax state banknotes, and this is giving federal government tighter control over the money supply. Right, so economically in the Confederacy, now, there is this interesting thing that's talks about, which is this idea of Confederate socialism. The Confederate government tried to kind of really seize control of the economy, one, to put it on a war footing. It had a lot more to do than the Union in terms of making sure it's got war industries. And also in terms of it's got this enormous problem with inflation, and it tries to do things like price setting, which actually just really leads to shortages rather than anything positive. It does have a limited impact on all of this. The Tredegar Iron Works, which are by far and away the biggest in the South, stayed in private hands. Inflation continued, and I've said this before. I mean, we're looking at prices being 5,000 times higher in 65 than they were in 61. So Confederate socialism, if it existed at all, and again, it's a very inflammatory term for Americans. if you attach the word socialism to anything, but it's not. I don't think it really was that. There was an attempt to try and take the control of the economy, but I think it was in a fairly minor way. The biggest success, really, in terms of economic policy was the Ordnance Bureau, and that actually brought a lot of kind of benefits to the war economy, ensured the production of weapons, got all the saltpeter in needed for the gunpowder, and so that meant that the war effort could function, and that was maybe one of the few examples of the Confederate government really taking hold of a part of the economy and it working well. To try and make sure they didn't end up with shortage of workers, they did give draft exemptions to keep the railways running, to keep factories running with all the key workers. Now, there was a network of railways across the South, and that aided movement of goods as well as troops. But again, this could have been more effectively maintained. There could have maybe been some greater government intervention here, and both might have led to greater efficiency. So, not a complete and utter failure in that, but there are some clear difficulties. Right, other areas. So we talked about the blockade before. Well, the way around that is what's known as blockade runners. Now, these were often very fast ships that could get past the Union blockade. Now, early on, there's a real issue with this. Later, there's some more success. From 63, a third of all cargoes had to be cotton going out and war supplies coming in. And they had about a 75% success rate of getting these ships through. They're often a bit smaller than your old-fashioned cargo haulers, therefore they're not bringing quite as much with them. Now, if more blockade running had been done in 61, when the Union blockade was at its least secure, then it probably would have brought a great deal of success. And the other problem the Confederate government had is that these are individuals, these are privateers who were doing the blockade running. And so they had a tendency with small holds to focus on profitable luxury goods, oversupplying the Confederate war economy. And so the war economy would have been more successful with greater control over blockade running and more blockade running early on. And some of this can be put down to the greed of the people who were doing it, and part of this can be put down to policy by the Confederate government. Now, in terms of running their economy, slavery remained absolutely central to the Confederate way of doing things, and slaves were used in war production as well as continuing to work in the fields. Now, life in the fields shifted a bit because cotton, although it had been king, is less so during the war. The cotton embargo failed as Britain found new markets, and so the need to feed the troops we looked at on an earlier part of the video kind of overrides that, and a lot of the plantation shifted to producing food. Right, on the Union side, they did bring in greater legislation, and what we get is exactly what we really would expect, is that we now have a Republican-dominated Congress, and so they bring in the kind of acts that the Democrats would have wanted to stop. So we get the Homesteaders Act of 62, and if any of you studied the American West, you might have looked at that in a lot more detail. And this was the idea was opening up more land in the West. They brought in higher tariffs. They brought in railway subsidies. And so we do see government intervention. That government intervention, however, is fairly effective. So what the Homesteaders Act helps get the economy going and helps the railway companies build up. The railways are really important and needed for the war effort. Maybe a little bit of criticism, they could have taken a bit greater control of it. There's a lot of profit that's leaking out and going to the railway companies rather than stuff that maybe could have used by the war government. But they do avoid the need for things like rationing, controlling prices. So fairly effective in that. In terms of equipping the army and economic growth, there is a great deal of raw material, capital, technology available. There's a big challenge to the industry in 61 because an awful lot of what the industry produced, they sold to the South. And so they've got markets that were open to them that have closed off. There's notable gains in production, notably things like canned food, shipbuilding, munitions. The increased money supply made it easier to pay off debts and secure loans for expanding companies. So that helped the northern economy. And faced with a kind of labour shortage, then this led to even greater technological advancement. And so we see the mechanisation in some elements of the production. Now, farmers also benefited from this. There was a huge demand of food, not only for feeding the army, but also from abroad. And we see a real boom in Union farming. So wheat, corn, pork, beef. So the amount they're producing goes up enormously. It doubled, and they actually massively increase the amount of land under cultivation. And the Homesteaders Act really helps that as well. But it's not all kind of positive for the Union. There are certain areas of the economy that really suffer. The cotton mills of New England are particularly badly hit. Immigration falls dramatically with people not wanting to move into a country that's at war with itself, unsurprisingly. And we actually see the population over falling by about 5.5% compared to what it should have been if things had continued as they were before the war. There have been, in terms of economic history, there have been some criticisms of the general view that everything was positive and rosy for the North, where people have said, well, look, the economy didn't grow quite as quickly as the earlier reports would suggest. And actually all these gains in mass production and stuff like that, well, that was all starting in the 1850s, and we just see a continuation of it. This isn't the war creating some kind of economic gain. Right. Thank you very much for watching. Please remember to like, share, subscribe. Over 100 subscribers now. Let's keep getting that going up. And I'm going to do a third kind of context video, which will be up and running fairly soon. And then we'll be ready to move on to the battles. So thank you very much for watching. Keep an eye out on the channel. Thank you.